The U.S. trade war is challenging Canada's economy. Our counter-strategy to U.S. tariffs? Buy Canadian.
We will build Canadian by becoming our own best customer.
But what most people don't know is that Canada's biggest pension funds, worth $2.5 trillion, remain heavily invested in the U.S. The CPP, for example, announced Friday it's grown to a record $780 billion, 47% of it American, just 13% Canadian. Real estate, private equities, stock in some of America's biggest companies. And since 2005, when Ottawa lifted its cap on foreign holdings, the CPP has invested more and more south of the border. Other pensions, too. The public sector pension fund is 41% U.S. assets. Ontario municipal employees, 55% American.
They are also investing in things, investing in plants, equipment, economic activity.
This investment manager says pensions support people's retirements, but can also boost the national economy.
They can influence people's wages in Canada. They can influence the wealth of Canadians.
But this expert says pensions like CPP should invest globally and focus on maximizing returns.
The good news is when you measure it as to how we've actually done the last 10, 20 years, it's pretty good.
He says funds like CPP are under no obligation to invest in Canada.
There's no obligation. There's no legal obligation at all.
The minister responsible says he met recently with Canada's top pension funds. He won't force them, but for now, they'll meet every 3 months.
We're going to be sitting together. We're going to be looking at opportunities, looking at the kind of projects that could lead them to invest more in Canada.
We reached out to several of Canada's largest pension funds. While their U.S. holdings may be big, they say they still have significant assets in Canada, and they're looking for new ventures, especially now that Ottawa is promising major new infrastructure projects to combat the U.S. trade war. Dave Seglin, CBC News, Toronto.